This is a paid advertisement on behalf of Lithium Chile. What's going on, guys? This is Aaron from Departures Capital, and we're here with Steve Cochrane, CEO and President of Lithium Chile. Pleasure to have you on today, Steve. How you doing?
I'm doing great, Aaron. Thank you very much. Pleasure to be here.
Yes, very exciting time for lithium. We've seen a huge rebound in the price, and you've got some really exciting news. So let's talk about it. After roughly a year and a half of work, Lithium Chile has now signed a definitive agreement for the sale of Arizaro. What were the biggest hurdles to get this across the finish line, and what changed recently that allowed the deal to finally lock in?
Great question, Aaron, and probably could spend an entire interview just on that issue alone. But there's no question it was probably some of the most challenging work I have experienced, primarily because we were dealing with three jurisdictions, three time zones, three languages, and three sets of lawyers. So the combination of China, Canada, and Argentina just complicated the process. And then again, the actual agreement itself went through a number of revisions. There was a lot of back and forth, as you can imagine, when you have a project like this in three separate jurisdictions. And it's a significant amount of money, 248, $250 million Canadian at the end of the day. It's not a small deal. So those are some of the factors I think contributed to the length of time it took to close the deal. There was also extensive due diligence done on the part of the buyer. First, technically, they had two separate site visits to Arizaro in Argentina with their technical team. And once the project passed the technical due diligence, then we had the financial and legal due diligence done by both Denton's and KPMG. And again, I like to say that was a little bit like a colonoscopy because there was a myriad of questions and digging up the information. So at the end of the day, it was an exercise that you had to do. Again, a significant amount of money being invested, not only upfront by the purchase of the Arizona project for 175 million US, but there's a follow-up investment that could run into $1.2 billion by building the plant, by developing the project. So it's only expected, I guess, it's not unreasonable that a company that's going to commit those kind of funds would spend the kind of time they did in their due diligence and in drafting a definitive agreement that both parties could live with. I'm happy it's done. It's signed. That was the major hurdle. Now we have a number of closing conditions that we are diligently working on, and we plan to call a special meeting of shareholders. Of course, for the deal to go through, one of the conditions is to have a shareholder vote on the deal itself. And we'd like to see that. We're hoping to see that sometime in the next 60 to 90 days.
So now let's talk about who's buying it. So can you walk us through who the buyer is, what attracted them to Arizaro specifically, and why you believe this group is a right partner to transact with in this market?
Very good question as well. And I do believe, having worked with the chairman of China Union Holdings for the last year, I've grown to admire and respect him. China Union Holdings is a major Shenzhen listed company. They made a vast fortune years earlier in the Chinese real estate market, but had the foresight to really get out of the majority of their real estate holdings prior to the slow down prior to sort of the setback in Chinese real estate prices. So they announced about 2 years ago to their shareholders and to the public that with the capital they had, they were looking at diversifying into lithium. They had been looking at South America since 2023, spent a lot of time in Bolivia, had spent a lot of time in Argentina, and interestingly enough, had looked at three projects, ours being one of them, and two competitors. And at the end of the day, they felt that our project at Arizaro provided the best upside, the best risk return for them. And that's when they, in mid-year 2024, approached us about doing a deal and purchasing our interest in Arizaro. They've also invested, well, first and foremost, as I mentioned earlier, having liquidated their real estate portfolio years ago, they're currently sitting on about 3 billion US in cash. So they're extremely well financed. They don't have to look at outside funders. They can fund the whole project internally. As well, they have technical experience in the lithium space because a year or so ago they became one of the major shareholders in a Chinese direct lithium extraction company called Fusion Enertech. So they have a significant investment now in one of the leading DLE companies in China. They've built a major manufacturing facility recently in Zhuhai, China. It was just commissioned last year. And so this is a natural extension for them. Having this core DLE technology, they saw having an actual lithium project as a major step forward, not only to be able to showcase their DLE technology on a real project, but also they saw at the time, and as you mentioned earlier, their foresight has proven to be fairly accurate, that they thought there was going to be a significant rally in lithium prices going forward. So they came to us, made an initial offer, disclosed in December of 2024, and then spent the best part of 2025 in just hammering out the deal. So their expertise in the lithium space through their DLE company, their strength financially, being a public company, these in my opinion, we couldn't ask for a better partner.
Very interesting story. So, from a shareholder perspective, what does this definitive agreement actually unlock? Is it mainly about validating the asset, crystallizing value, strengthening the balance sheet, or positioning Lithium Chile for the next stage of growth?
All of the above. I think there's so many positive factors from this transaction, both for the company and for the shareholders going forward. First and foremost, it validates the fact that our team on the ground in South America can identify a grassroots project, which we did in Arizaro, and take it from an exploration program to a successful sale. And that's a huge step forward, and that's been validated by the fact that this company has come in and signed a definitive sales agreement to offer us 175 million for one project. Now, admitted it's the most advanced project, but still only one of 12 projects that we have in Chile and Argentina. The other important factor is that it sets a value. We've got a company right now with a market cap of 135 million dollars with these 12 projects, and yet we have a 248 million dollar cash offer for one of the projects. So there's a bit of a disconnect right now that the market is somewhat skeptical we can close the deal possibly, but the fact that we have this offer on the table that's basically worth twice what our current market cap is, I think shows the value, or at least part of the value in our lithium portfolio in South America. The second thing, of course, it does is it's going to cash up the company, but more importantly, it's going to allow us to reward our shareholders, if you like, our long-suffering shareholders. We intend to repatriate a large portion of the cash, the majority of the cash to the shareholders through a substantial issuer bid, where the company, once the deal closes and the cash is in the bank, everything's been settled, we're going to make an offer to buy back at a specific price. I would hope somewhere between 60 and 75% of the outstanding shares. So this money will be returned through the share buyback to the shareholders. It'll be returned in the form of a capital gains, so it'll be very tax efficient. And the third important thing is it will shrink our float. We currently have about 223 million shares outstanding, and I'd love to see that float reduced by that 60 or 70% and give us a much, I think, higher value per share because we have these remaining assets. And the other thing we intend to do is retain, between 30 and $35 million cash in the company to allow us to really focus on what we see as our next major project, which is the Salar de Coipasa in Chile. That has the potential to be as big, if not bigger than Arizaro. The grades that we've seen through our sampling and our initial exploration program were as high as 1,400 milligrams per liter of lithium, as compared to 300, of course, on Arizaro. And yet the basin is as big as our Arizaro project and deeper. So we have high expectations for Coipasa. And with closing of this transaction, we'll have the capital to advance it.
Seems like you're in an awesome position right now for the next stage of your business. So let's talk China-Canada relations as of recent. So we've seen a major reset in China-Canada relations recently, with Mark Carney's visit creating a big shift in tone and optimism. How do you see this changing the landscape for Canadian resource companies? And does it open up new strategic capital or partnership opportunities for Lithium Chile moving forward?
Well, first and foremost, let me congratulate Mark Carney on doing something that should have been done before. China, as the world's second largest economy, one of the fastest growing economies, one of the fastest growing now technology developers, without question, has the best EV technology, the best EV vehicles in the world. And I know I've driven in a lot of them. Rehabilitating our relationship with China is a real coup. The benefits that we see arising, for not only the Western Canada farmers, but I think technology transfer, just the ability to tap into the second largest economy, arguably the largest population in the world, is a real coup. And I think some of the disconnect on the share price versus the market capitalization, or the market cap and the amount of the offer on this deal, has been the concern over, it's a Chinese company, and the fact that there has been these challenges in the past, certainly under the Trudeau government. This may be one of the reasons there's this disconnect between the offer and the value of the company. I see Carney's move is going to minimize that. I think, first and foremost, it's an Argentinian asset. It's not a Canadian asset. The capital from the sale will allow us to advance our other projects. So in a way, it's beneficial to us. It's beneficial to Canada because it'll give us the necessary funds to advance on a number of other projects, as we discussed earlier, that we have in Chile and in Argentina. So I'm pleased to see that there's this détente now that we've Carney and indeed we've tried to build bridges. In the past, we were building walls. Now we're trying to build bridges into that second largest economy. And I think certainly Canada will benefit as a whole.
Definitely, Steve. Well, I appreciate the update. It's taken you quite a while to get this done, and I'm sure that you're happy and relieved so far. Fingers crossed everything moves to completion. But the environment could not be better right now for lithium. This is what lithium investors were waiting for, this rebound in the price. Let's hope it continues. And we'll definitely have to have you back on for more updates, but best of luck as things progress.
Well, thank you, Aaron, for your support, and to your viewers who may hear this. I really believe after a very trying year and a half, and now we've got the majority of the challenges behind us, and I look forward to closing this deal. I look forward to taking part of the proceeds and investing it in our portfolio that we have, as well as rewarding our shareholders for their patience, their long suffering patience, and just moving to that next level.